Helen Thomas and the CDFM study group. We are going to continue review of CDFM Module 3.3, which is the accounting section. So the Module 3 is accounting and finance. Last week we did the finance. So today we're going to go over the accounting section and the key aspects of that review. At any time, if you have any questions, please pause, stop, and ask your question. You don't have to wait until the end because the key to success on this examination is comprehension, being able to understand the process, the key individuals involved, and the documents that is produced within that topic. So let's move on to page 3.3.5, which is it goes over there are three types of accounting in the federal accounting system. So you have budgetary accounting, proprietary accounting, and managerial cost accounting. And we're going to look at each one of those. Before we move forward, next to proprietary accounting, I want you to write the word financial, because another word for proprietary that you will see interchangeably used within the study guide is financial accounting. So again, on the slide at the top, budgetary accounting, put proprietary accounting / financial accounting, and the third one is managerial cost accounting. All right, moving on to page number 6, the United States Constitution. So if you look at this slide and you remember last week, we talked about Article 1, or 2 weeks ago, I'm not sure which one it was, Article 1, Section 9. So automatically, the Article 1 tells you what? Who are they talking to? Legislative branch. What's another word for legislative? Congress. There you go. So Article 1, Section 9, remember, this is the part of the Constitution that says the government will shut down if we do not have an appropriation law in place. This particular law, again, is the reason that we have a continuing resolution, the CR, each year, because if we don't have an appropriation law, what happens? If 1 October we don't have a law in place, either a CR, the government was shut down. I'm not sure if that's what you said, but yes, the government was shut down if we have neither one. And this law is the reason that the government shuts down, because you cannot take any money out of the treasury unless you have a valid appropriation law or the stopgap. All right, so there are 3 different types of financial systems you'll see on page 7. You have the balance sheet, the statement of net costs, and the statement of change in net position. For those who have not taken any part of the exam in the past, if there's a formula in the study guide, note that it will not be given to you on the exam. You have to know the formula. So I'm going to show you different ways that you can remember the formula for the balance sheet and the statement of net cost. All right, so you see there's samples on ranging from page 8 all the way to page 10 of each one of the 3 financial systems: balance sheet, statement of net cost, and statement of change in net position. So it's similar to civilian accounting, but it's not exactly the same because the government's focus is not to earn a profit. So you have to review that information. All right, so we're going to jump all the way to page 13. Should be a check on learning about the federal financial management. These are key players throughout the study guide. You have Office of Management and Budget. Who or what is the purpose of the Office of Management and Budget? And I'll pause there for a response.
Outstanding. What about yourself? I love you.
All right, so Office of Man, are y'all still there? Don't sleep on me. Don't sleep on me yet. So Office of Management and Budget works for whom?
Yeah, are you home or you out and about?
So they work correct. So they work for the president. So they're the chief financial officer for the president. And that is who the DOD responds to. So who within the DOD is the chief financial officer? And not the person's name, the position. Okay, who can help her out? Who at the DOD level is responsible for the budget formulation, budget execution within the DOD level? All right, now I'll go ahead and help you guys out. So the USD, there you go. Oh, I'm also taping on YouTube. So the person on YouTube says, yes, on the Secretary of Defense Comptroller. These key individuals, that's the reason I pause on this page. You have to know who these individuals are because they issue policies, they issue guidance. As far as the flow of funds or flow of funds come through OMB to the USD Comptroller down to the services. So you need to remember who they are. So Office of Management and Budget works for the president or the executive branch. You also have the Government Accountability Office. All right, so the GAO works for whom? Everybody should chime in. Who does the GAO work for? The Congress. And what does the GAO do? What is their purpose? What is the purpose of the GAO? All right. So remember, GAO is that independent, there you go, audit, yes. The independent auditing agency that works directly for Congress. So remember, Congress places limitations on the appropriation, and the GAO is that independent auditing agency that evaluates the executive branch, evaluates us to ensure that we are following the guidelines that Congress has established. All right, what else? Department of Treasury, we all talk about. That's the federal bank, for lack of a better word. That's where we get our funding from. And then the Federal Accounting Standards Advisory Board, they establish the guidelines for accounting, for documentation, for evaluations, inspections, and so forth. Okay, so while I'm here, I'm out for those who have access to the computer. I'm going to pause here and let you know I'm also on live on the YouTube if you want to say hey, or you can continue to just listen in on the phone. All right, so page 14 goes the Accounting Standards Board. You have different ones there. I'm not going to focus there. On page 15, again, it gives you the federal accounting standards established by OMB, GAO, and the Treasury. If nobody else you know about, you should know about those three, and you should also know about the USD Comptroller, because the USD Comptroller is where the Army, where the Navy, and so forth. That's who we get our allotments from. So you should at least know that those key individuals. So that's what's on page 3315 is the different federal accounting standards that we receive from each one of those entities. So you have some good information on page 16, 17, all the way through 19. Remember, even though I do not cover every single page, I do recommend that you go through the information and look at it. All right. So the federal GAAP hierarchy, all of that stuff you can read through. I'm just going to focus on the key areas. So I'm going to jump actually to page 3324. Okay. All right. So the different types of government funds, you have appropriated funds, which we commonly deal with, NAF funds, non-appropriated, reimbursable funds, revolving. Remember when we talked about working capital fund? That's a revolving, and then your NAF fund. So we're going to go into a few of those. On page 25 should be no surprise to you because we've already looked at the different categories of appropriation. You have annual. All right, so I pause here. Who could tell me what are the annual appropriations? Which one are annual appropriation? So either on the phone line or if you're on the YouTube, what are the annual appropriations? Go ahead, please. O&M, and there's another one. Yeah, close, but not appropriation. I need the appropriation. So O&M is appropriation. What's the other annual appropriation? Those in uniform, how do y'all get paid? Which appropriation pays you? Meal purse. Go ahead and slap yourself. All right. So remember, meal purse and O&M are both annual appropriation. What are the multi-year appropriation? So it's more than one. Go ahead. Research. Okay. So RDT&E. What is another one? So another one is, okay, somebody said milk. Okay, another one is procurement. Procurement is a multi-year. So anything that's more than that 1 year, that is considered multi-year appropriations or investment type. So you also have military construction. That's the 5-year appropriation. So it's multi-year. All right, so everybody should know this one. What is a no year appropriation? What is it called? What type of funding? And probably the only one no year appropriation we talked about. It is, let me see, the working capital fund. So the working capital fund is a no year. It means it's revolving. It does not expire. Of course, there's still guidelines in the use of these appropriation. On page 3326 of your book, DoD appropriations time limit. So the questions that I asked earlier is listed right at the first chart on the table 332. MILPERS and O&M 1 year appropriation. RDT&E is a 2 year. Procurement is 3. Shipbuilding, conversion, and Navy is a 5. And military construction is 5. Of that chart, remember, shipbuilding and conversion Navy is actually a procurement, but because it's 5 years, they kind of break it out. The typical procurement is a 3-year appropriation. What does that mean when I say a 1 year, a 2 year, 3 or 5 year appropriation? What does that really mean? Can anyone assist with that? Okay, so up until these particular timeline, the funds are good. And what can you do with them before they hit that expired state? So when the funds are open, what can you do with them? Come on now, y'all. Yeah, this is a study group. That's not Miss Thomas group. And everybody knows the answer. When an appropriation is good, what do you do with it? Right. You can obligate, right? New obligations, new contracts, new MIPers. You can do all of that when the appropriation is good within these timelines. Once it hit the expired state, what can you do with it? Any appropriation, once they hit the expired state, what things are we allowed to do with those funding? Obligate fund. Okay. All right, Mr. Jones, what can I do with an expired appropriation? Upward and lower adjustments. That's correct. So the only thing we can do when an appropriation enters the expired state is to make adjustments, right? That's what you do with prior year funds. You either reduce it or increase if they need additional prior year funding. All right, what things can we do when the funds enter the closed or canceled state? And anyone can answer that. All right, so when they're closed or canceled, the the only thing we can do is what? I'm gonna pause one more minute. Can we make new obligations if they're canceled? All right. Okay, so all right, so YouTube, Mr. Jones says yes, the 1% rule. So the only thing that we can do is based on when an appropriation is canceled, you cannot no longer use that funds. Those funds are returned where? Where does the funds go back? The Treasury. So those funds that are closed, the accountability of those funds return to the Treasury. And remember when we talked about the 1% rule, it says that if I get an account that was closed and I get a bill towards it, I can use up to 1% of what? So we know it's the 1% rule, but what 1% of what? Okay, so 1% of current appropriation, the same type of appropriation, but I can use up to 1% of my current appropriation to pay a closed bill. So the questions that you see me asking as you're studying, these are the type of questions that you need to ask yourself continuously. Pause. So don't just rush through the information. Sit, think about it, ask yourself the same type of questions that I'm asking to ensure that you comprehend before you move forward. So, next, okay, we've already talked about obligations. All right, when it comes to, remember, in order to obligate funding, we have to have what? Before you can obligate funding, what are some of the things that you have to have before you can spend the funds? So I have to have what? Funding. Maybe I should have the budget authority to spend it, right? So I have to have the funding because remember, ADA violation says I can't spend before I get the funding. ADA violation says I can't spend in excess of what I have. So these are all the guidelines. And then you also have supporting documents. We cannot just arbitrarily obligate funding if we do not have the authority in writing. So we have to have contract in hand to obligate. We have to have a MIPR, a 448, and get the 448-2. So on page 3327, it talks about obligating documents, the contract, and the military interdepartmental purchase request, the MIPR. Now, within the MIPR, remember, and I think we talked about it in module 1, you have it's either a project order or an economy act order. Can anyone tell me what's the difference in both? The project order or the economy act order? How do you differentiate between the two? So this is what you do. So project order. So think of a project order. It sounds like, okay, there's a project that I'm doing, something large. So that means whenever I obligate those fundings for that project, if you read through that passage, it says I cannot deobligate those funds at the end of the fiscal year. Project order. Economy Act order says that at the end of the fiscal year, I can deobligate those funds. Of course, Going back to the other part, supporting documentation, I have to have a 448-2 from that organization returning the funds. I can't just arbitrarily say, you know what, it's the end of the fiscal year, deobligate everything. I have to have supporting documentation. So project order, do not deobligate. It can cross fiscal year. Economy Act, those funds are typically deobligated at the end of the fiscal year. I will pause. Do I have any questions from anyone, either on the phone line or on YouTube? You actually have to type in your question. Okay, if no question, we'll drive on page 3328. Don't forget, it's not disbursement, it's outlay. Remember the word outlay. That's when the funds are removed from the treasury to pay a bill. So I know we're more familiar with the word outlay, with the word disbursement, but in most instances in this study guide, you're going to see the word outlay. All right, the bottom of page 28 is the meat and potatoes of this chapter. This chart you're going to have to memorize, you're going to have to learn, because once you learn this chart, it would help you remember the formulas to creating the balance sheet, the budgetary accounting transaction, and so forth. And I'm going to show you how to do that. So at the bottom of page 28, you see you have the account codes ranging from 1,000 to 8,000. 1,000 is for assets, and the normal balance is a debit balance. 2,000 liability, normal balance credit. 3,000 net position, the normal balance is credit, and so forth. I'm not going to read through each of them. So we're going to hold up this particular page as we move forward. I'm going to continuously refer back to this chart. So on page 29, remember we said there were three types of accounting: budgetary accounting, proprietary or financial accounting, and managerial cost accounting. So page 29 represents the first type of accounting, budgetary accounting. And the formula for that on page 29 is resources must equal your status of resources. So you say, okay, what does that mean to me? Most likely what you're going to see or get is a list of transactions, either starting with 1,000 or 1 all the way to 8. So when it comes to budgetary accounting, if you go back to the chart on page 28 at the bottom, you see the 4,000 numbers. Anything that starts with a 4 refers to a budgetary transaction. So if you get a list of numbers and it says, okay, which one are budgetary transaction, all you have to do is pick out all the numbers that begin with a 4. Resources equals status of resources. So that is budgetary accounting. Also, what I want to point out at the bottom of page 29 are those terms that you have to be familiar with as you move forward. So you have apportionment, allotment, commitment, obligated, expired, and canceled. So which one is missing out of this list? When it comes to the flow of funds, which word is missing? Who could tell me that? And it goes before apportionment. What word is missing? What word goes before apportionment? I'm sorry, what did you say? No, try again. In order for us to apportion, what do we have to have prior to apportionment of funding? I heard you said authority, but you are partially correct. But I'm looking for that other A word. It starts with an A. And it's not a trick question. All right, I'm going to help you out. Appropriation. Remember, Congress appropriates. Who apportions? What's the next step? Congress appropriates, then who apportions? And that's knowing your hierarchy or your chain of command when it comes to resource management. So anytime you hear the word apportionment, who apportions funds? All right, Captain Jones, don't sleep on me. I'm checking YouTube. I don't see you answering. All right. So remember, Congress appropriates, OMB apportions the funds, and DOD issues allotments, and the other agencies issues allotment. So the bottom of page 29 again is a flow of funds. Congress appropriates. It's not on this page, but you have to remember flow of funds. Before you can apportion funding, you have to have appropriation. All right, so we beat that one down. All right, the next page, page 30, but keep your hand on page 28 because we're going to go back there. The next page is the second type of accounting, which is the proprietary accounting or financial. And if you notice on page 30, in parentheses, they put the word financial accounting, but they didn't do it on the slide. So proprietary and financial is the same thing. So it gives you two formulas, actually, for the balance sheet. It gives you assets equal liability plus net position. If you go back to the chart on page 28 at the bottom, you see the title assets. Under it is liability. The next one is net position. The account code 1000, 2000, and 3000. So the best way to remember this formula is assets equal liability plus net position. My 1000 equals my 2000 numbers plus my 3000 numbers. So if you get a series of numbers from 1000 to 8,000, all you're going to have to do is, okay, my assets, they always start with a 1. My liabilities all start with a 2. My net positions all start with a 3. Once you separate those numbers, assets equal liability plus net position, your left side must equal your right side. That is accounting. All right. Does anyone have any question on the balance sheet? Okay, I don't hear any questions. We'll go ahead and move forward. So what I've just showed you with using the chart is how you remember the formula for the balance sheet, because on page 48, it's already in order for you. Assets, liability, net position. So it's asset equal liability plus net position. And I just wanted to repeat that because that's how you're going to remember the formula. All right, so the next formula is the statement of net cost. Remember, you had the balance sheet, the statement of net cost, and the statement of change in net position. That's just keeping track of what changed from one cycle to the next. So the formula for the statement of net cost is expenses minus exchange revenue equal the net cost of operation. If you go back to the chart on page 28 again, you will see your expenses are 6,000, your revenues is 5,000. So your 6,000 numbers minus your 5,000 number, everything that starts with a 6 minus everything that starts with a 5 will equal your net cost. That's the third formula that you're going to have to learn in this section. So resources equals status of resources for your budgetary accounting. Proprietary accounting is your balance sheet and statement of net cost. Your balance sheet's formula is assets equal liability plus net position, and your statement of net cost is your expenses minus revenue. Your 6,000 numbers minus your 5,000 numbers will give you your net cost. All right, page 31 through 33, it now tells you the flow of funds, what type of accounting transaction is included when the flow of funds occurred. So the best thing to remember, the best way to remember the type of transactions is you see transaction number 1 through transaction number 7. All you do is look for the differences. When Congress appropriates the money, on page 31, transaction number 1, you have a proprietary and a budgetary transaction. You don't even have to memorize which account, the 4119, the 4450. Just know it requires a budgetary and proprietary accounting. All the intermediate transaction, OMB apportions, the DOD issues allotment, we commit, we obligate funds. All of those only require budgetary transaction. It's not until you get to transaction number 6 and 7 that you have other types. So transaction 6, when I receive the items that I ordered, it requires a budgetary and 3 different types of proprietary transaction. You don't even really need to learn what type. And then transaction 7, when I pay the invoice, it's then a budgetary and a proprietary transaction. So you can kind of see. So remember, the first one was budget and proprietary. The last is budgetary and proprietary. And then transaction 6, when I receive the item, 1 budgetary and 3 proprietary transaction. So that's the best way to learn that portion of it without really understanding the specifics. If you're good enough to remember and you can remember the individual transaction, then I say go for it. But that's the gist of it. So they have examples of the general ledger on page 34, 35, and a balance sheet on page 36. So if you remember basic accounting, one side, if you have the equal sides in the middle, then one side must equal. And then if you'll know if your answer is incorrect, if they say, okay, what calculate or perform the balance sheet with how much is your assets, how much is your liability, and so forth, then you will know if you're off, if your assets does not equal, your left side does not equal your right side. All right, any question? All right, so we are going to jump to the third. Let's see, statement of net cost. So you have a bunch of examples in between for the different types of spreadsheets or balance sheet, budgetary resources, the statement of change in net position. You have different examples. So I'm going to jump all the way to page 3347, which is the third type of accounting, which is managerial cost accounting. So the definition for managerial cost accounting is the second paragraph on page 47, which defines managerial cost accounting as the process of accumulating, measuring, analyzing. So it's taking the statements, the balance sheet, the budgetary transaction, you take all of that data, and now you're analyzing it to see the what ifs or how we can save funding. So managerials look not only, they look at the total cost, not just the direct cost, but it also look at the indirect cost, the cost of overhead. So you look at total cost is really what it is for conducting an operation. On page 3348, it goes into ratio analysis. So now we want to see, depending on the type of operation you have, is what is the company's, what's the agency's ability to pay for its obligation. So that's what these ratio analysis is used for. Solvency, how soon can we liquidate what we have to pay for our bills? All right, so current ratio. So the difference between the current ratio and the quick ratio is the use of the dollar value of your inventory. So the formula for current ratio is cash plus accounts receivable plus inventory divided by current liabilities. That, so you want to know what's the purpose? What do I care about the current ratio? And when you read through on page 48, what it's telling you is the current ratio is used to analyze the company's ability to meet its obligation, to pay its debts, depending on the value, the percentage. The quick ratio, in the event you don't have enough time to analyze your inventory, you see quick ratio is cash plus accounts receivable divided by current liability. So the formula is exactly the same. The only difference is you add the inventory for the current, or if it's a quick snapshot, no inventory is included. On page 49, you'll see in bold, another name for quick ratio is the acid test ratio. So it provides a reflection of how quickly the assets can be converted to cash. How quickly can we take the assets, convert it to cash to meet our current obligations? So DOD's goal for quick ratio, that's the last sentence of that paragraph on page 49, says DOD's goal for quick ratio is a 1-to-1 or better. All right, where we at? So what that concludes that portion of it, but I also want to look at the exercises and refer you to the exercises on page 3351, because now you can actually see how you use that chart that we referred to earlier on page 28. So you'll get an exercise such as exercise 331. What does it mean? Okay, hold on. I got a question. What does it mean at least 1-to-1 desired for ratio? All right, let's go back. So we have a question on the floor. DOD's goal for quick ratio is 1-to-1 or better, meaning that once you do the percentage, I need to be able to, I have enough cash on hand. 1-to-1 mean I have enough cash that equals my liability. 1-to-1 or better. Better means I have more cash, 2-to-1, and less liability. So 1-to-1 is simply I'm breaking even. That's the word I'm looking for. I'm breaking even with the 1-to-1. I have enough cash to pay the bills. That was a question that was asked, so that's what I was pausing. All right, are we good, Mr. Jones, on 1-to-1? While he answers, I'll go ahead on page 51. All right, so 51 is a chart that is referring back to page 28. Account number. So automatically, all you're doing is looking at the account number. What does it start with? So A says by examining only the account number, indicate whether the account represents a proprietary or a budgetary account. The quickest way, all your budgetary numbers start with what? I want to make sure y'all not sleeping on me. All my budgetary transactions start with a what? A 4. So all you do, go down that list from 1 to 13. You pick out all the ones that start with a 4. For column A, those are budgetary. And okay, thank you, 4. And if it's not a start with a 4, it's automatically a proprietary transaction. B says, note if the account is an asset, a liability, or net position. My assets numbers start with what? With a 1. So everything that starts with a 1 is an asset in column B. Liabilities start with what? 2. And net position starts with a 3. So when you look at the count numbers, everything that starts with a 1 is an asset in column B. Everything that starts with a 2 is a liability in column B. And everything that starts with a 3 is net position in column B. C says, show whether the normal balance of the account is credit, debit, or either. That's going back to the chart on page 28. So as you can see, the normal balance is given to you on page 28. So if you notice, flipping back to page 28, 3328, the assets is a debit. Let's see how many debits we have. We have 2 debits. The assets and the expenses are debit. Liability, net position, revenues, and financing sources are credit. Budgetary gains and losses are both. That means it could be either or. And memorandum is for your other is non-applicable. It doesn't have a normal balance. So that's what you put in on page 51 for column C. Exercise 332 is talking about the flow of funds. What type of accounting transaction is it, a proprietary or budgetary? So you should easily be able to circle this because the accounting event is in order. Congress appropriate, OMB apportions on the SF 132, DOD issues allotment, we commit, we obligate, we get the goods, we accept the goods, we make payment to the Treasury. So you have to circle whether it requires a budgetary or proprietary transaction. So I just wanted to orient you to the exercises. I don't typically go to the exercises unless I see they add more value to the information. So this concludes the CDFM Module 3.3 or the accounting section. What questions do you have of me, either through the YouTube or on the phone line, that I can clarify for you or get back with you on? Any questions? Actually, I have one question, because wherever section you go to, you need to ask yourself what guidance, what regulation, what policy. The accounting section, what DOD regulation discusses the accounting for the Department of Defense? What's the regulation? Right? What DOD regulation? And we talked about it last week when we did the finance part. What's the DOD regulation? Because again, this is a certified defense financial management exam. So you at least need to know the DOD's guidance. Go ahead. Okay, I thought I had an answer. All right, so on the YouTube, that is correct. The DOD FMR, but it's the 7000.14R. Make sure you don't forget the 7000, because I see you just put volume 14R. DOD 7000.14R. That is the DOD regulation that you go to for finance and accounting. So even though it's not directly stated in the accounting section, remember that's what you go to. All right, any questions of me before I depart? Okay, I don't have any questions. So next week we will pick up on CDFM Module 3.4, the auditing section of the 2018 study guide. So be sure to share our YouTube channel with others who are aspiring to earn their certification. Be sure to subscribe if you have not subscribed yet, so that you'll get the most up-to-date information as I continue to update with the 2018 information. So thank you guys for stopping by, and I will see you guys again next time on the CDFM study group. Okay, I will. Let me shut off the YouTube thing. Oh, okay. Yes, ma'am. Hold on.